You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? It is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging. If you're listening to the network, that means you checked out the futures rundown yesterday. We had a great show with our buddy, Mr. Dan Gramza, talking about a lot of what's going on in the underlying. This show, very much the sister program to that, where we talk about what's going on in the options. So make sure you're listening to the full network. And of course, if you want to go above and beyond, you want to check out some great pro Q&A sessions. You want to check out unusual activity with options oddities, live streams, giveaways, all kinds of fun. Theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us on the old CME Group Hot Seat this week. Pleased to welcome back our old pal, Mr. Scott Bauer from Prosper Trading Academy. It's been a little while since you've joined us here on TWIFO. Mr. Scott, welcome back to the Hot Seat, sir.
Thank you, Mark. Appreciate it.
All right, then, with the team assembled, let's dive right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME Group this week. And looking at the chart right now, listeners, it's pretty close to 50-50, even though we have one banger to the light side that is kind of dominating everything. But outside of that one big percentage mover, it is pretty close to 50-50, if not slightly biased to the dark side, maybe 55-45, looking at the red. But Mr. Scott, you think you can handle walking our listeners through the light side and the dark side this week, sir?
Oh, yeah, absolutely.
All right, sir. Start wherever you feel like it.
Let's go light side. All right. So first thing I'm looking at, especially since PPI and CPI are the 10-year notes. So those actually, I'm sorry, looking at rates, not the note. The note is actually down. Looking at rates. Rates are on the move up, even though the Fed is going to cut next week. Rates across the board are up. So I don't know. That's probably somewhat what the market is looking at today, and why there's a little bit of hesitation out there. But really, really, the big mover, and this might have been what you were talking about, Mark. Natural gas. Natural gas is on a move here, on a tear. And again, I'm not sure if that's the move that you were talking about earlier, but seeing that thing trade up as high as 355 today, what a mover you got there. So on the energy side, we also have crude. I wouldn't say it's on a breakout move up, but given where it's been, I think it's on the light side. So I think we do have to talk about that. Corn's something we don't talk about a lot. Corn made a nice move off of the lows. I know I tried, I was looking right around the 430-ish level or so as a possible entry, and that thing just ran away from me. Absolutely just ran away from me.
All right, a lot to unpack there, listeners. As we keep looking, let's run through our movers and shakers for this week here, listeners. Let's start to the light side. We'll go green because we're feeling optimistic. Number 5, we're kicking it off in the metals, in particular, the shiny stuff. It is palladium, up 2.77%. Number 4, to the equities, in particular, the consumer discretionary sector of the equities, up 3.06%. That was number 5 in the same direction last week, up about 2.5%. Number 3, to the energy complex we go, in particular, heating oil, up 3.57%. Number 2, KC wheat, up 4.38%. So from heating oil to the ags. And the number 1, as Scott was just alluding to, listeners, number 1 with a bullet this week, it is nat gas, up 13.15%. You know, if you listen to the futures rundown yesterday, we were talking about the big move in nat gas. It is that time of year, listeners. You know, we expect some seasonality in nat gas, but this may be outperforming to the upside again, up 13.15%. Now to the dark side we go. Number 5, we have the healthcare sector of the S&P 500, off nearly 2.8%. So it's not all green in the equity market this week, listeners. Including number 4, we have the energy sector of the S&P, off 2.86%. It was in the exact same spot last week, number 4 to the dark side, off 2.76%. So a rough couple of weeks for the energy sector of the S&P. Number 3, to the rates we go, the ultra 30-year, off 3.2%. Number 2, back to equities, this time the utilities sector of the S&P, off 3.72%. It was number 5 in the same direction last week, off 2.72%. And our number 1 dark side mover this week is lumber, off 4.58%. We were talking about that yesterday on the futures rundown as well. Again, check out that show if you're missing it, listeners, and just how lumber for a long time in the early part of the pandemic, listeners, everyone was talking about crypto. Everyone was talking about meme stocks. Dead trees are the most volatile asset class on the planet for the first year change of the pandemic. Has, of course, settled down since then, but lumber making a bit of a move out here this week, off 4.58%. And not to be outdone, listeners, let's go to the CVOL front and see what's lighting it up out there, listeners. Again, you can run these numbers for yourselves. Just type CME and CVOL into whatever browser you're rocking. That will get you to the CVOL dashboard. Set the high-low range to 1 week. Then make sure you're checking the aggregates tab. You want to look at all the aggregate CVOLs. And then, of course, I like a nice grouped list, but to each their own there. And then from there, listeners, we're kicking things off in the energy CVOL this week. 58.95, up 5.32 points just today. Banger day today on the energy vol. I think nat gas accounting for a fair amount of that, obviously. Also pinning the needle for the week. The low is 52.29. Interesting week from a CVOL perspective. We got pretty much half of our names pinning the needle to the upside. The other half kind of pinning the needle to the downside, and a couple hanging out in the middle there. So we're kind of all over the place on the CVOL front this week, listeners. Right below it, we have the aggregate commodities CVOL, 35.43, up 2.59 points just today. So again, popping hard today. That is the high for the week. The low was 32.07. So a decent range in the commodities CVOL this week. Below it, we have the metals CVOL, 18.08, up 1.07 points just today. That is no small move for metals, listeners, and getting a lot of that today. That is also pinning the needle to the upside for the week. The low was 15.62. So getting a lot of vol and energy, aggregate commodities, and metals this week, listeners. Now we move on to the ag products. The ag CVOL, 17.53, actually off 0.06 today, and kind of hanging out in the middle of its range for the week. The low was 17.24, the high 17.91. Below it, we have the FX CVOL, 7.93, giving up about a quarter of a point today. Also hanging out in the middle of its range. The low was 7.72, the high 8.16. So not a explosive week in FX vol. And then below it, we have the Treasury price volatility, listeners, 5.29, off 0.4 points just today. So pinning the needle to the downside right now for the week. The high was 6.33, so over a point range on the week for Treasury from a price vol perspective. What about a yield vol perspective, you might be asking? Well, the Treasury yield vol, listeners, 90.42, off 7.19 points just today. So rates vol cratering today, listeners. That is the low for the week, the high 108.83. So again, a tale of two cities on the vol front this week. Half of our names pinning the needle to the upside, the other half pinning to the downside with a couple hanging out there in the middle. But now it is time for us listeners to keep on rolling. And it's kind of hard. I know we talk about it a lot here on the network, but it's kind of hard to escape what's been going on in the energy complex of late, listeners. I think we have to start our show there.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, to the world of energy we go. Listeners, go into that drop down, cmegroup.com/TWIFO, of course. And then once there, you can go into that drop down for energy. And then obviously when it comes to product family, we're going to go into nat gas because that is just the banger of the week. Scott, you mentioned it earlier. It's kind of hard to ignore. I mean, it seems like we talk about nat gas a lot, but that's because it's delivering week after week. In fact, looking at the numbers right now, listeners, nat gas $3.45 in that front future, up 38 cents or 12 1/3% just since Monday. And of course, volume-wise, 1.05 million contracts on the tape in nat gas this week. So yet another explosive week, no matter how you break it down, listeners. Volume, volatility, price action, it's all there in spades in nat gas. Mr. Scott, sir, what caught your eye out there this week?
So if you look back on the 6th and 7th, so last week, there was a huge gap in nat gas from basically 309-ish up to 328 or so, let's call it. So when nat gas fell back down, and this was just 2 days ago, this was on Tuesday, it fell back and filled that gap mark almost to the penny, like at 309. That was an unbelievable entry. So for those of you that follow, technical indicator called a gap fill, boy, did that thing just fill almost to the penny, and it has not looked back. 309 up to, a high of 355 in 2 days. That is meteoric.
Meteoric indeed, listeners. And it's been a while since we've seen 1 million contracts going up in nat gas. So yeah, definitely a meteoric week out here, listeners. Over 1 million contracts. Where is the lion's share of that paper lining up right now? Nearly 60%, 58.6% going up in the Feb contract. That has about exactly 2 weeks to go, 14 days. So we're going to hang out there right now, listeners. What is the vol, you might be asking, in the Jan nat gas? I mean, we just talked about the energy CVOL gaining a lot of juice there just today and indeed this week, listeners. And again, a lot of that coming from Nat Gas. Nat Gas Jan contract 73 and a quarter, up 10 and a third points since our last show. So vol getting juicy out there. You're going to be hard pressed to find a lot of assets we're going to talk about at CME that are more volatile than a 73 right now, listeners. Maybe you could find, even Bitcoin, crypto hanging out in the low to mid 60s, I do believe. So yeah, wow, that's a lot of juice for Nat Gas. In terms of skew, listeners, given this meteoric move to the upside, not surprising that the calls have a little bit of juice. They had some juice last week as well. They were 12.5% bid. So if you were scooping calls last week, listeners, I tip my cap to you because that trade has worked out. That bid has come in a little bit now, which not surprising. We've seen a big move. 10.6% bid are the calls this week, listeners. So still a lot of juice, still a lot of upside interest to be found here. The puts, nobody seems to care right now. 9.5% discounted last week, 10.3% discounted this week. And in terms of action, listeners, what was the number one most active contract out here with Nat Gas lighting it up to the upside this week? It was the 4 calls expiring in 2 weeks, listeners, doing a whopping 85,000 contracts this week. So again, just for some context, that's going to be more, I'm sure if you pulled up silver right now, it's going to be more than the entirety of the silver complex and a lot of other products we might talk about today. Just in that 4 call, listeners, 85,000 contracts going up this week. So a banger. The big day actually today, 29, almost 30,000 going up just today. That's almost exactly as much as the OI, 30,500. So they could be bailing on all of them today, listeners. Doesn't seem like it. It seems like they actually line up pretty nicely with the 4 halves today. 25,000 of those going up today. So maybe we've got a 4 half vertical. There are also 25,000 exactly of the 4 halves open right now. So they could be bailing on a 4 half vertical, or they could be doubling down on it. Either way, that's the big print this week. 29,000 of the 4s right now, 22,000 yesterday. So also a pretty active day yesterday. They were slightly closing yesterday. So maybe some folks are getting the heck out of Dodge on these 4 calls. They got a nice move, taking what they got, getting the heck out of Dodge. Certainly makes some sense. We saw some opening earlier this week, 17, almost 18,000 going up on Tuesday, mostly opening there. 15,000 on Monday. So again, if you were opening 4 calls on Monday, you're probably not mad taking them off today for a little bit of a winner out there. But it's not all calls all the time, listeners. Number 2 this week is actually on the put side. 61,000 of the 3 puts. Again, all Jan all the time, listeners. So all 2-week paper. The big day for these was actually Wednesday, 20,000 on Wednesday, about 18,000 going up today against an OI of 45,000, 13,000 on Tuesday, about 10,000 on Monday, opening all week long. So folks are opening on the 3 puts all week long. Given the way the skew is lined up, it does seem like folks are probably overwriting a little bit. So maybe using that to fuel some of their upside buying. Maybe they are buying the 4 calls and using the 3 puts to finance it. You like that, listeners, as a risk reversal, selling 3 puts and buying the 4 calls? Scott, is that a trade that floats your boat right now? 2 weeks to go, selling the 3 puts in Jan and buying the 4 calls, sir, doing that risk reversal?
That's a tough one. The momentum is definitely to the upside here, but literally we just saw it down at 309 2 days ago. So I'm not sure I want to put that Texas hedge on, to be honest with you. And that's what we call that when you're, short put, long call, or other side, long put, short call without a hedge. That's a Texas hedge. And I don't think I'm ready to do that.
What about straight buying the 4 calls? Is that a bit of a bridge too far for you too? Or you think they can hit 4 in the next 2 weeks?
I'd probably rather buy a spread. Maybe a little bit lower of a strike and sell it around 4.1 or so. I don't think I'd want to buy the calls outright because, as you said, vol is ticking up in there also. So besides this huge run up, we've got premium levels that are more expensive now because of vol. So if I was going to, look to do something on the upside here, maybe I'd do like a 380, 380, 410 spread, something like that.
Keep it nice and tight out there. I could certainly see an argument for that, listeners. If you like some spreads, looks like I said the 4 halves were trading with the 4s kind of in lockstep in the latter portion this week. So maybe somebody looks like on a total of 57, almost 58,000 of the 4 halves have traded this week as well. Again, looks like it lines up pretty well today. Also lines up pretty well yesterday with about 22,000 closing of the 4s and about 22,000 opening on the 4 halves yesterday, So nice little roll up from the 4s to the 4 halves. You like that, listeners? Or are they bailing on the 4s a little bit too soon? They still are half a dollar out of the money. So if they are rolling 4 half in 2 weeks, that's not an insubstantial move for nat gas, but it looks like we have some of that action going up on Wednesday. Monday, 8,500. Tuesday, kind of light, only 2,500 going up on the 4 half. So kind of all over the place here in nat gas. Let's go a little bit farther out to see if we see any other longer term paper beyond just 2 weeks that catches our eye. Let's go out 47 days, listeners, to the Feb contract. That future at a 320, listeners. So a little bit cheaper than the front month. And we got the 4 calls going up 20,000 times out there as well. Pretty even, about 5,000 to 6,000 contracts a day throughout most of the week. The OI right now, 17,000, 6,500 going up today. So it looks like folks maybe piling into some more 4s out here. The 4 strike is definitely the hot strike out here this week, listeners. So interesting. 4 calls. Are you down for those, listeners, or is that a bit of a bridge too far for you, either in 14 days or in 47 days in nat gas? All right, Mr. Scott, you want to hang out in energy, talk maybe WTI? You want to pick up some other products, sir? What's lighting up your tape this week?
WTI has been pretty lame, to be quite honest with you. It's been a sell to rip. If anything, I know we're trading off lows, or, we're just right around 70 right now. I think that's been pretty lame. I'd move on if you're okay with that.
I'm more than okay with that. So where do you want to head next, sir? I'll let you have dealer's choice.
Dealer's choice. I love that. Why don't we go into the treasuries?
All right, listeners, a little bit of rates. Here we come.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, you know where to go. Pop out of that drop down in energy, go down. We're going to go down 3 slots to interest rates. Then in product family, we're going to go to U.S. rates. Then we're probably going to hang out in the 10-year. Where we go from there is anyone's guess. We did see on our dark side this week, the Ultra 30-year sneak in there off 3.2%. We also saw a lot of vol action in the rates complex this week. Of course, we saw CPI and PPI numbers out there this week and leading to some interesting action. Also saw some aggressive cuts in rates overseas. So there was some action in the rates complex this week, leading to a lot of vol coming off the top. As we mentioned, the price vol in the Treasury complex already at a pretty low number, 5.29, coming in almost half a point just today and having a full point range on the week. You don't see that in Treasury price vol very often. And then, of course, the Treasury yield vol at about a 90 off, nearly over 7 points actually today, and coming in about 18 points on the week. And of course, all this ahead of our Fed decision. We don't have the Fed till next week. So, Scott, they're crushing vol in the rates complex going into the Fed, sir. What do you think about that?
It's unbelievable because, especially if you look at CVOL, we saw just massive volatility for the longest time. We saw, vol in the complex up near its highs, and then just over the last month or so, it has really tanked. And yeah, you're right. Going into next week's meeting, volatility in that complex is really low. So, if you're looking for a move, and we don't know if we're going to get it, right? I mean, right now the CME FedWatch tools pricing a nearly 100% probability of 25 bips next week. The question remains going forward beyond that. So to me, it makes sense to buy some of that volatility given where we were, where we are now. So that's what I'm looking at.
Yeah, listeners, if you want to check that out for yourselves, of course, just type CME and FedWatch into your browser. You'll see exactly what Scott's talking about. Pretty close to unanimous opinion, 95% that we're going to get that 25 basis point cut. Only 5% saying we're going to hang out where we are, which is kind of interesting. I know some of the inflation numbers, especially on the PPI side, maybe casting some of that into question out there, but not being reflected in the Fed watch right now. Nearly about as unanimous as it gets in the Fed watch right now that we're going to get 25 basis points. You agree with that? You disagree, listeners? Hit us up. Let us know as we go find out what's lighting it up out here in the 10-year. And spoiler alert, another action-packed week on the rates front. 2.58 million contracts on the tape right now in the 10-year. So yeah, spoiler alert, we're not going to break all that down, all 2.58 million contracts, listeners. But we'll hit some of the salient points right now. Almost exactly a third of that, about 33% going up in the Jan contract that has a little over 15 days to go. By the way, if you're wondering where is that 10-year future hanging out right now, 110.12 off about a little over a point on the week, or about exactly a percentage point on the week, listeners. Vol-wise, we all know treasuries are not the place to go to get price vol, at least. Yield vol, different story, fairly juicy, but the actual underlying price volatility, not so much, listeners. And that is the case right now. The Jan vol, again, getting annihilated. The Jan vol, 4.56. Yes, we were just talking about nat gas in the 70s. Jan vol in the 10-year is at sub 5. 4.5, listeners. And that coming in aggressively this week, coming in 2/3 of a point. I mean, when you're starting around a 5 handle, you don't really have 2/3 of a point to give up. And yet, they crushed that. Which again, this certainty, this lack of reluctance to crush vol going into the actual event itself, I always find it a little bit mystifying. We've seen this happen many times in a variety of products, not just the rates. We saw it happen in FX heading into, of course, the big Brexit. Seemed like a done deal. It wasn't going to happen. We all know how that worked out. We've seen it going into big elections in the past where people thought, hey, we knew for certainty how it was going to play out, and then surprise. You're already starting out at a 5 vol, and they're just hitting it with both hands here, listeners. So kind of fascinating. Not much in the skew, really, in either direction, unless you're really excited about a 1-point premium to the puts out here right now. But in terms of action, listeners, again, the one place that the rates deliver is on the volume front. And the 112 calls going away in 15 days, listeners, doing 141,000 contracts. Now, that's almost 2x what we were just talking about in nat gas, which in and of itself was a banger, a little over 80,000 contracts in those calls. You're talking 141,000 in the 112s here in the 10-year. So yeah, a very active options complex, listeners. The big day for these was actually Monday, almost 55,000 going up on Monday. Looks like mostly opening there. And then it's about 26 to 30,000 every day the rest of the week. Opening every day, 26,000 today against an OI of nearly 90,000. So folks, opening a whole bunch of 112 calls, which is interesting. Those are nearly 2 points out of the money, listeners. So we're at a little bit north of a 110 right now. So substantially out of the money calls. Now, interestingly enough, the 113s were going up this week as well. And those are not quite half the volume, but pretty close, 74, almost 75,000. And they were closing on some of those. So maybe we have some roll downs here, even though on Monday, it looks like they were trading straight verticals. 51,000 of the 113s traded on Monday against 54,000 of the 112. So it looks like we have some straight vertical action going there, listeners. And the rest of the week was kind of quiet. So interesting paper all over the place, but it wasn't just calls, listeners. The 110 puts. So again, the pretty much at the money puts right now going up 81,000 times this week. Again, so much paper. We could spend hours parsing all of it, listeners. The big day for the 110 puts was actually Wednesday, 27,000 going up there. Looks like slightly closing there. And then we have 22 to 23,000 each Tuesday and Monday, back and forth closing to opening, which again, not surprising when we're hanging out. The at the money strike, people are going to be getting in and getting out. That makes sense. And then today, about 7,500 against an OI of 56,000. So back and forth action on the 110 puts. Scott, anything here surprising you? Are you a fan of these 112s with 2 weeks to go? Because somebody trading 141,000 of those this week, sir.
Boy, honestly, a few days ago, I would have thought, yes, that we're going to break up there. In fact, when we hit 111 just a couple days ago, that looked like a real interesting area for me for a break back to the upside. But obviously, after the the data over the last couple days here, even though, like I mentioned earlier, even though the Fed is more than likely cutting next week, longer term here, it sure looks like rates, are stabilized at worst and going higher, at best for something like this. So rates going higher, and this 10-year note is not going to hit 112. So not as excited about that right now as I was 2 days ago.
And, I get it. We're getting into the mid-December range. This is usually the time of year where volatility goes to die. So I understand it from a seasonality perspective, and rates are not immune to that, of course. But it is a little surprising to me. Is it surprising to you, Scott, the complete and utter lack of reluctance to just annihilate vol when we haven't even heard from the Fed yet, sir? Does that surprise you?
We have not heard from them, and yes, it does surprise me. Like you said, though, maybe it has something to do with the time of year, but a lot of strange things have happened this year, Mark, that have not followed kind of historical patterns, and maybe this is one of those.
That's true. I've seen this a number of times, so I shouldn't be surprised anymore. But it always surprises me when people are just hitting the bid with both hands, and we don't even know what's happening yet. That always surprises me. And of course, there's not much blood to be squeezed out of this stone at this point. You're sub 5 in a vol, and yet they're still coming for it. So yeah,
that's right.
I guess no vol is safe this time of year, Scott. I guess that is the takeaway. In December, no volatility is safe, and no product is safe from being analyzed on the show, Scott. So where should we head next?
You know what? We might as well go to the metals.
All right, we got some metals lighting it up here, listeners, including number 5 to the light side this week, palladium. And of course, when you're talking about rates, the natural other side of that conversation is the shiny stuff. So to the metals we go.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the shiny stuff we go. Pop on out of rates and go down one slot. It is an alpha order list after all. We're going to hang out in precious. And just because we just talked about it, I will dispel all the questions coming in saying, why don't you talk about palladium? Because palladium right now, listeners, by the way, hanging out at a 992, up a whopping 26 points or about almost 3%, doing a total of 1,041 contracts this week. The big dog are the 1,000 puts going up 394 times. So not really a lot to sink our teeth into out there. Scott, where do you want to stop now in the shiny stuff this week? So you want to go gold? You want to go silver? Something else?
Yeah, let's go gold because we've seen a lot of volatility the last few days here.
All right, listeners. So go into that drop down. Go to the top of the precious metals to gold. 2707 as we're coming into the show today. That puts it up a little over 47 handles or nearly 2% on the week. 1.75%. Obviously, it needed about another percentage point to break into our top 5 this week. It had to outpace palladium. It couldn't quite do that. In terms of volume, is it lightening up out here? And actually, yeah, looks pretty active this week. 304,000 contracts is a pretty good week. Usually, we expect gold 225, maybe 250 if it's pretty active. So 304. Pretty fair amount of paper out there. Scott, what's catching your eye out there in the shiny stuff this week, sir?
Well, what's real interesting to me is if you look back about 3 weeks or so when we topped out, what it was about 27.45 or so, we did, notch above that yesterday, but similar top there. And we've seen a bottom of, about 26.30 or so. So we've got this really, really well-defined range where we're almost back to the middle of that range. If gold drops another 10 or $15, we're right in the middle of that range. So as range bound, as you can say, that's been at least for, the last 3 weeks or so, vol is definitely picking up. There's no question.
Well, when we're talking the shiny stuff, listeners, we know a couple of things going in. First off, the skew is going to be biased to the upside, and we're going to see also some longer-term, wild, out-of-the-money call paper somewhere in the shiny stuff. So we know that coming in. The question is, what else will we see out here this week? And right now, we have about 28% of the paper going up in the Jan contract that has about 14 days to go. So we will hang out there. The vol nearly a 14, 13.89, up about 0.21 out there this week. And that's also kind of in line with what we're seeing out here in the metals CVOL, gaining a full point just today. So metals vol getting a little bit juicier. So when I say no vol is safe, maybe metal is the exception that proves the rule, listeners, because metal vol, they're bidding up metals vol while they're coming for just about everything else, which is kind of interesting out here. And of course, energy, but energy is always a bastion of volatility. Anytime, dog days of summer, they don't care in the energy complex. They're juicing up the vol, but interesting stuff out here this week, listeners. In terms of action, we know the calls are bid. What's interesting is that looks like some of that call bid might be starting to come in. So the calls last week in January, they were 2% rich, which historically speaking, from a precious metals perspective, is not that much. So maybe we're finally starting to see the momentum of this upside run start to fade and the shiny stuff, listeners. The calls this week are actually taking a bit of a hit. They're 0.9% cheap, so they've swung ever so slightly in the other direction. We don't see that too often, listeners. And the puts last week, they were about 1% bid. This week, 1.6% bid. So looking at it right now, we are seeing a slight bid to the puts and a slight discount to the calls. If you know much about precious metals, you know that is a very aberrant skew scenario. Now, it's pretty modest. It's about a point and change in either direction, so it's hard to read too much into that. But just the fact that we're not heavily bid to the upside in the skew is indicative in and of itself. Now, if we go farther out the term structure, listeners, we go out, let's say, a year to, early next year, or even to, let's say, July of next year. Let's go out to July. Yeah, middle of next year. Those calls are about 7.5% bid, and the puts are 2.6% discounted. So our more traditional skew setup is shaping up out there. But in the near-dated contracts, things are a little bit in flux, which is kind of interesting, which leads us to our number one offender out here this week, listeners. I said we're at about a 27.07 in gold. How does the 2800 sound with about 14 days to go? That is our number one leading offender out here this week, listeners. So nearer dated than we've come to expect in gold, and still out of the money though. So that's par for the course. We saw nearly 4,000 of those going up just today, 3,600 today against an OI of 11,000. So are folks piling into more? Are they taking them off? 2,500 going up yesterday, also opening there. About 1,000 on Tuesday, slightly closing. 1,400 on Monday, slightly opening. So back and forth on these 2,800s all week long. I'm looking to see if I see any roll candidates, listeners. Looks like about 2,200 of the 27 halves have gone up today, and about 2,000 of the 27.75s. So roll from the 27 halves to the 2,800s. I mean, we've seen stranger things out there. Only 2 weeks to go, so that would be quite another leg up if you were indeed buying that. And we know usually if past is prologue in the metals, folks are buying the upside. They're not traditionally selling it. So kind of interesting. But then again, the skew is offered now. So maybe all bets are off in the near term here in the shiny stuff, listeners. But let's go a little bit farther out, because that's usually where the wild and the woolly stuff is hanging out. Let's go all the way out, listeners. About 47 days, so not that far, going out to February, listeners. And it's the Feb 2800s also lighting it up. So 2800 seems to be the strike of the week out here in the shiny stuff, listeners. Doing about 6,800 contracts there. Pretty active all week long. Again, the big day is today. About 2,900, almost 3,000. So interesting. That's not that far away from the paper we saw going up today in the 2 week, the Jan 2,800. So that's about 3,600. So it could be a roll out as well, listeners. Doesn't quite line up 1-to-1, but again, if you're feeling your oats on the 2,800 strike, you think 2 weeks is not enough time, you want to buy yourself another month, then maybe you're rolling out to the 2,800s here in February. I don't see any other real roll candidates out here. So 3,000 today, almost against an OI of 8,200. About 1,000 yesterday, slightly closing, and then 1,400 each. Monday and Tuesday, both opening there. Scott, does that float your boat at all? The 2,800s, either in 2 weeks or in about a month and a half? And then also, what are your thoughts on the fact that we're maybe seeing some of the skew, which is traditionally always aggressively bid to the upside in the shiny stuff. Maybe that's starting to mitigate. Maybe are we seeing maybe a little bit of some top action here, sir?
I think we're really range bound. I wouldn't say it's top action at all. I do like those 2800s. I really do. Not for 2 weeks from now, but going out 4-6 weeks, I like that a lot. Again, until we break down, Mark, from the bottom of this recent range, 2640, 2650 on the bottom here, I don't think that we can, or at least that I can, look at this and say with any sort of conviction that it's either top heavy or the rally's over. I still believe that, just like I said with crude, that it's a sell the rip. I still believe that gold is a buy the dip.
Well, it looks like somebody might be up to that because we got some more traditional upside paper going up. If 47 days doesn't float your boat for the 3000s, listeners, how about we go, the 2800s, how about we go a little bit farther out? We go about 75 days and we go up a few strikes to the 3000s. Yeah, the March 3000s lighting it up this week to the tune of about 6,000 contracts exactly, about 2,900 yesterday, 2,800 today, and about 300 on Monday, opening all week long. Again, doesn't seem like if they're rolling, it's a weird roll, so it doesn't seem like they're rolling. Again, the paper yesterday and today, oddly symmetrical, so they could have put them on yesterday and thought better of it today and got the heck out of Dodge. That'd be a very quick close if that was the case. But again, we've seen weirder things. Today's paper goes up against an OI of 18,000. So listeners, you like those? The 3,000 strike in about 75 days? Because somebody opening for size on that strike as well. All right, listeners, we're kind of coming up against it. Probably got time for one more complex, Scott. So I'm looking at our movers and shakers here. We've got, obviously, we already did rates. We've got some ags lighting it up, so we could go out there. Or perhaps something else is catching your eye, sir.
Yeah, let's go to the ags. That's good. I like that.
All right, listeners, we'll finish it off with a little bit of the green thumb as we roll on into the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, pop out of that drop down for the metals. Go all the way up to the top of our list for the ags. Then you're going to go into grains and oil seeds for the product category. And we have KC wheat lighting it up, number 2 out here this week, up 4.38%. But if you know much about wheat, KC wheat is not the big volume leader in the wheat complex. Only 8,700 contracts on the tape this week versus Chicago wheat, aka SRW wheat, doing about 125,000 right now. So we're going to hang our hat out there, listeners. If you're wondering where is that future in Chicago wheat, 558.75 up here this week. So a decent little week, a little pop, not quite as aggressive of a percentage move here as we're seeing in KC wheat. And in terms of paper, like I said, about 125,000 contracts, 37% of that going up in the March contract that goes away in 71 days. So we'll hang out there. Scott, are you a big wheat guy, sir? Anything catching your eye out there this week?
I'm not a big wheat guy, but this chart did pop up here because if you look at it from basically the third week or so in November, where it topped out like 576 and then just was, this unbelievable stair step down over the next 2 weeks, bottoming out at 540. And then now we're sitting right in the middle of that range. And that's a pretty big move there. That is a really big move. However, if you go back a little bit further, Mark, and for people that are looking at the charts and the technicals here, this thing's made lower lows and lower highs. So on this rally back up here, if you're kind of a believer in that, and you see that trend here, wheat in the next few weeks or so might be a bit bearish.
Yeah, obviously, listeners, it's hard to talk about wheat without talking about what's going on the geopolitical front. And obviously, there may be some flux with what's going on in Ukraine with, of course, the new administration coming into town in January. So obviously, some of that weighing and impacting what's going on out there in wheat right now. We'll hang out here in the March contract. It has about 71 days to go. What is the Vol in wheat, you might be asking, 26 and a quarter, off about 1.5 points right now. And that also lines up with what we saw in the ag CVOL, listeners. That was coming in this week, and one of the products we saw that was kind of having a hard time catching a bid on the vol front out here were the ags, and wheat, again, reflective of that trend here, listeners. In terms of leading the dance, oh, by the way, what is the skew out here in March wheat? Last week it was fairly bid, 17% bid were the calls. This week, a lot of that has come in. Still juicy, but not quite as frothy. 11.2% bid are the calls this week. The puts are literally unched on the week, 9.3% cheap. Last week, 9.3% cheap. This week, and in terms of action, it was the par calls, the 600 calls leading the dance. Again, these have about 71 days to go. Doing about 6,300 contracts this week. The big day was actually Tuesday, 2,700 on Tuesday, 1,500 on Wednesday, about 1,000 on Monday, and 1,100 today against an OI of 8,700. Looks like opening all week long, so it looks like we got some folks piling into some upside here. Worth noting, there was also some action in the May 620s, doing about exactly 6,000 contracts this week. Almost all of that, 5,800 going up on Tuesday, opening there. Looks like that was against, it looks like we have 2,900 each of the 580s and 2,900 of the 660s going up on Tuesday. Looks like we have a bit of a fly, listeners. Obviously, 1 by 2 by 1, the 580, 620, 660 fly going up on Tuesday in Chicago wheat. So interesting levels. You like that, listeners? If you're looking to express a little bit of upside, that could be one of the cheaper ways to go about it. Obviously, you're getting 580 to 620, and you got that 660 kicker there in case something wild does come to pass out here in March wheat. So kind of interesting. Or actually, this is May wheat, but kind of interesting out here. A different structure than we typically see out here. So we're always intrigued by that, listeners. Are you intrigued by all things ags? Well, hit us up, listeners, and let us know. Let us know what you're seeing and what you're trading out there in the ags, and indeed in anything going up in futures options this week. All right, listeners, that music means we've come to the end of another fun journey through the world of futures options this week. Man, we went all over the place. Kicked off in a little bit of energy, did some metals, a little bit of ags, a little bit of rates, a little something for everyone on the docket. Unless you're a hardcore FX guy, in which case, listeners, we abandoned you and I apologize. But for everything else out there, listeners, it was a pretty fun show. Before we go, Mr. Scott, if folks want to see what you have cooking over there in Prosper Land, where should they go? What should they do?
prospertrading.com. I appreciate the call out there, and we are here trading and educating our students all day long live in the markets.
There you go. Check them out, prospertrading.com. And while you're checking things out, you know where to go. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires on these reports and everything else they have cooking over there at CME as well. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk some vol with our buddies Dr. Vix and a cohort of special guests. Join us on Vol Views tomorrow. It should be a fun time. And then after that, one final show exclusively for our pro members. We come back to talk unusual activity on options. Oddity should be a good one there as well. Then we're off for the weekend. I get to rest my voice, listeners, until we're back again next week, all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com. twico.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.